Hey everybody, welcome to Options with Hans. I'm Hans Albrecht, 15 years pro market maker and a decade after that managing a whole bunch of income funds, downside protect, black swan type funds. So thank you for joining me today. Of course, today is for educational and informational purposes only. This is not trading or investment advice. If you're okay with that, let's keep going. If not, we'll see you next time. So pretty interesting day today. I've got to say, we have a little bit of interesting action. It is out of beta in some ways and into the broadening theme, things that are actually making money, things that are working, even within MAG at this point. Let's look at real estate right here, starting to come back a little bit. So we're seeing some of these rate sensitive areas start to find a little bit of a bid. It's all been about MAG lately. Let me show you the MAG stocks. And my interesting watch list here. So we've got, and I think we've got a bifurcated MAG at this point, right? So I've been saying this for a couple of months now. I've been saying, listen, the ones that kind of interest me the most are the ones that kind of straddle those two worlds of a little bit of physical and real world, as I like to call it. And of course, AI, because if you're not involved in AI, it's not that interesting to me. And I think those are the explosive potential type names. So if you look at Apple, AI in your pocket, hardware, not a cheap stock, great story though behind it. In the right place at the right time. Google, of course, the best AI stock out there. So many ways to monetize AI, and that's what people are interested in, right? They crushed Meta after those earnings because Zuckerberg doesn't have as solid a plan, right? So they're very much, even within MAG, they're saying, listen, some of you are not doing as well, and some of you are. Tesla trades at ridiculous levels, multiple levels, and yet they are still giving it the benefit of the doubt. It's been moving around a little bit up and down 10, 15 bucks at a time, but it's hanging in there because it still holds on to, guess what? A lot of AI promise, but moving into another area, which is going to be that physical area and also the energy area, which is a difficult area, right? So we are now understanding from many, many people, we heard it from Nebius as well this morning, which is, listen, we've got some problems. We don't have any capacity, right? So there's this very different from the 90s. I was talking about this on a show this morning. I said the 1990s was building capacity that you were not going to use for years and years and years. This is capacity being built that is being used right now. Every single chip. There is no capacity left. This is nowhere near like the 1990s, right? Of course we are going to overbuild at some point. It's inevitable. But right now they are sucking up, they are absorbing every little bit of compute out there. And a number of companies have come out to say that. So this is full speed ahead. That plays into things like the NVIDIA, but they're a little bit off. They're a little bit off the data center plays today, right? So a little bit of off chips. They're even out of my beloved MU today, a little bit. Still a great story. And look at the data center stocks. Nebius, nice move on the open, and then they crushed it. CoreWeave, not nearly in as good shape because they started crushing it last night. And look at this chart, almost heading down to the recent beta crash levels. I think this has the potential to keep going because what we're seeing right now is a move back into reality, which is the potential for rates to start coming down again, right? So I'm starting to position in some of these rate plays that, I got into those, they ran up, they gave it all back and then a little bit more. But I think it's a nice way to kind of start tiptoeing your way into some of those things, mid sort of treasury, certainly corporate bonds. I think there's some great quality bonds out there I think are very, very interesting at this point. But I only want quality. I want the very, very best of the best because this is an uncertain world that we're heading into. But look at this, rocket companies, basically Rocket Mortgage. They have that full vertical real estate stack of companies that they've built up over time. We can even see Zillow coming back a bit. I think that looks actually kind of interesting. But data centers out. Look at this, IREN. This is data center. This is related to the power, right? These are the old crypto companies that have become purveyors of power to all these people. They're doing deals with MAG. Very interesting, but massive valuations, right? So anything with a massive valuation right now is not in a happy place. Look at Oikos, still kind of hanging in there, but not far from those recent beta sell-off levels. Same thing for some of the other power plays. VST almost at those levels, perhaps peering over the edge of the cliff, looking into a lot of air down here. So I think this is a very dangerous area. I'm very bullish AI over time, but this is a dangerous area if you're not positioned correctly. Palantir kind of hanging in there, even though it's the poster child for very, very expensive stocks. But man, are they doing things well? They're priced that way, but they are doing things well. My absolute favorite, one of my biggest positions, snow up today, almost near all-time highs. I told you guys months ago, I said, listen, this is data. It is mag and it's data. Now, it's not all mag, as we can see. Meta has not done well. Some really, really great stories going on in the data place. I said 4 or 5 months ago, I did a presentation. I said their phones are going to be ringing off the hook, because what do these companies do? They take all the data, they go into your company and they say, you've got 100 silos of data, you've got all kinds of stuff going on. And these companies are saying, listen, please help me. I'm begging you, help me, give me something related to AI that is going to start turning the wheel for my shareholders and for us, because if we don't keep up, we're going to be in trouble. So these companies are in a position to basically charge. Look at what Palantir is doing. They're charging whatever they want. Apparently, what they offer you is almost magical, and that's the reception that they're getting. And so this is the new age of inference, where AI inference is about how do we start generating value, right? So we're moving a little bit away, even though I think there's a lot of build out to go over, even throughout the world globally. US, very, very well positioned data centers, but still needs to build more. Europe really, really needs to get going there. That's why I think Nebius is actually kind of interesting, good presence in Europe, but definitely there's a lot of build out to go there. So the training aspect is not over, but the inference stage is where this starts to get very interesting, and things start to move into the rest of the economy, the balance of the economy, the S&P 490 or 493, the Russell, perhaps, which is not quite picking it up, but we're getting back to this kind of resistance area. We broke down below this sort of kind of channel here. We're right up to that 9 EMA. I love looking at that 9 EMA. If we can get through there, just as the S&P is doing today, look at the S&P. Look at how it absolutely shrugged off this drop below this neckline here, came down to this trend line, which I thought was maybe a little bit weak. I thought we had a chance at 655, maybe high 650s, and we got to about 661, 662. So it wasn't far, but we bounced right off and we did not pause. We are through that trend line. We are now above the 9 EMA, which quite frankly puts us back into bullish territory. And if indeed that means that broadening is now going to help to take us up there, we don't need the mag at this point, right? They've had a good run. I think Google and Apple, my two favorites, which I've been talking about for months. I said, these are my two go-to plays. They are almost defensive in nature. They've got physical, they've got AI, they've got massive ecosystems. Microsoft there as well, not getting the love right now, but I think Microsoft isn't far from that. It's kind of like a Google, where it has a suite, a productivity suite that lends itself very well to delivering monetization of AI right away, right? What if you start doing something fantastic within Excel, within your productivity suite, you start really, really generating some value for people, you have pricing power. Nobody is going to leave that product once you start turning the crank up on productivity and real life benefits that can happen very, very quickly in the software world, right? That's the low hanging fruit. Building robots and things like that, that's not low hanging fruit. That's a big capital investment. You start turning the crank for people and making a difference with literally software as a service, something you download, something you already have as Microsoft and Google. You are now already starting to drive value for those customers. That is absolute gold. So those are some of the things that we're seeing out there. We're starting to see one of my absolute favorites and biggest positions, Goldman Sachs. Look at this. We came back down to about 750. We bounced up and sort of sloshed around in here in this little sort of traffic area. And now we're starting to push up almost to new highs. This is going to be a new closing high if we get a little bit higher today. And that's very, very exciting for me. I love that. I do not want too much exposure to personal loan, those kinds of things. We're seeing some difficulties in the car loans and things like that, although delinquencies are maybe just starting to crest and come down a little. So not all bad at all there. But I just want to stay away from that area. I want to be with the smart people who are absolutely going to figure out how to make money no matter the kind of environment. So that's a name like Goldman, it's a name like JPM. Very, very exciting stuff. And then of course the data plays. Look, here's Datadog. We have positions in that. Did very, very well in Leaps Trader. My son has a boatload of this stuff. Thank goodness. I don't know why I didn't put it in a couple of other accounts, but he's doing great there. But we're doing well on Snow. And I think one other interesting area is, I'm going to give it all to you today, right? Let's take a look at XLV. Look at healthcare. I've been saying this for a while too. How does AI not help healthcare? I mean, this is going to be even just structurally, administratively, all those things. And then of course, being able to do things. I put something on Twitter the other day and I said, listen, there's this new product. It can reduce the amount of time necessary to accomplish some task, some scientific task by like 95%. And somebody said to me, well, where's the money in that? And I said, are you kidding me? Where's the money in that? I mean, I can't point specifically to what product that is being used for that specifically, but what are the repercussions of dropping the time it takes to discover things, to, you know, the things that have taken time, right? We can't compress time, except now we can with AI. We can take something that would have taken however many man hours and compress it into almost nothing with the power of computers that are just getting smarter and smarter by the month, and AI is working together nonstop. So there's just so much incredible stuff that is about to happen. And I think the market, as it tries to sell off every now and then, just always comes back to the glass is half full. Yes, employment is a bit of an issue. So we obviously have to take a look at that. But the fact remains that, listen, if we get to a point where rates are coming down, Powell has to cut because of jobs, but we start to see productivity and profit margins improve. It's already great in big caps, in many areas of big cap. If it starts to improve, which we're starting to see a sign of in the rest of the economy, the balance of the economy, rates coming down, profit margins improving, especially in areas that are not that expensive, this could be gangbusters. We could be heading to 7,500, 8,000 like it's nothing, if that is truly what's starting to happen, right? That's a big if. I'm not giving anybody advice here, but if you are a bear, you are going to be staring at your screen as these numbers come out. And if we start to see better and better numbers, as we're starting to see from small, mid cap and broader parts of the economy, this is going to set up for a very, very positive roaring 20s type scenario, which is something I've been talking about for a long time. So is it starting to happen? Well, I mean, the market's at all-time high. So I don't think this is a cat out of the bag at this point. I think the market's telling you what's happening. And the fact is, fund managers are having their worst performance in decades. So active fund managers versus the index are performing the poorest in decades versus the index. Do you think there are people who have some catching up to do into the end of the year here? You darn tootin' they do. They do not want to answer the phone and say, I do not own NVIDIA. I do not own all these stocks that I have not frankly owned for the last few months. I need to get in there. So that's another potential tailwind. Corporate buyback window starts to open up. You know, companies love to jam up their stocks and buy a whole bunch of stock. That is a wonderful feature of being an investor. You have these cannibal moves, buying up their own stock, and that results in fewer shares driving those earnings, and that's better for shareholders. So a lot of potentially really, really good stuff happening. We have to watch employment, make sure that doesn't fall off a cliff. Let's take a look at some of these sectors again. Here's your real estate. Let's take a look at the utilities, kind of hanging in there, right? They have that big tie to the data centers and power. So it's a little bit muddy, the waters there on utilities. So a little bit confused, maybe not always the best indicator of what's happening. But here we go. We can see healthcare starting to kind of push up a little bit. Let's take a look at the big cap. Big cap sort of has kind of come off just a little bit here. And then let's take a look at energy. Beautiful energy starting to really outperform the broader market. Look at that popping up. I like to see these moving averages start to curl up. Here's your 20 starting to curl. I want to see that 50 curl up. Top of the Bollinger Band, maybe just very, very short-term overbought, but I'm starting to like that area as well because we need power generating sources, and natural gas is plentiful. It's nuclear is a couple of years away. It takes a while. It's even longer if you're looking at some of these larger reactors. That is just not realistic. And so right now they're getting a little bit excited. We have a position in Leafs Trader in XLE, which is actually starting to move in our favor. It actually moved away from us for a bit, but it's starting to come back a little bit. So consumer discretionary, we know there are a lot of problems there. Chipotle's and restaurants really not doing well. We cannot disregard the fact that there's a pretty serious chunk of the population suffering, and that is extremely important to recognize that at some point that cannot continue. So we'll have to see how that plays out. I have some ideas for that, which I'll keep bringing you in my videos. Here's ARC Innovation, kind of pulling back a little bit, right? These are longer term charts. Here's the shorter term chart coming back down to this sort of consolidation area. So I think I don't know if you want to start rushing into high beta just yet, but it is an area where you definitely want to pay attention, because this is going to be a sign of, is that animal spirit money still around? So we've seen an unraveling in the crypto complex. We've seen an unraveling in the sort of AI, pure AI energy plays, the Oclos and things like that. We've seen an unraveling there. The question is, that's to the benefit of the mags. They've done very, very well for the most part. Do we see a little bit of a turnaround? I do believe we are starting to see that. I think we start to see some of the big caps kind of get a little bit toppy there. I mean, look at Walmart. Amazon's cheaper than Walmart, right? So I'd rather have Amazon any day of the week than Walmart. But having said that, big cap companies are really quite rich at this point, and that makes me want to start looking elsewhere and a little bit more. Also, though, I am getting into the ARKG, so healthcare but turbocharged, right? So we got some extra ARKG, which we played earlier in Leaps Trader. Now we're back to that. So I'm putting on some turbo trades as well today. So I've got my Turbo Trader product. Get on the wait list. There's going to be a wait list down in the description here. This scanner, this is my Turbo Trader Pro Income Scanner. There's nothing like this in the world. This is something I've developed 30 years, decades of everything going on in Hans's head. All the crazy stuff is all distilled down into a point and click scanner that is going to make a massive, massive difference for people. I'm just so excited about this. This is really something that I've thought about for years and years and years, and it's all coming together. I'm so excited about it, and it's going right into Black Friday. So we're going to have this kind of Black Friday sale. I mean, this thing is going to be very, very expensive, but for Black Friday, it is not. This is a chance for you to get into my head, my ecosystem in a way that is going to save you boatloads of time, and you're going to learn an absolute ton in this as well. So I'm very, very excited about that, and I'm going to bring you more about that soon. But definitely check it out. There's a wait list down in the description so you can find out about it. We're only going to release a certain number because this is going to also involve weekly meetings, learning, talking, discussing. I cannot have 200 people in this room right off the bat, right? So there's going to be a select number of people who get a chance to become part of this at a fantastic price, and it's going to be an opportunity of a lifetime. So very excited about that. So thanks for watching, everybody. I'll try to do another one in the next couple days. I'll show you the turbo trades that we killed it on Micron, on Goldman Sachs, on Google, and we have it on Amazon. That's what this thing finds. It finds income, but when it's time to absolutely smash it, and the indicators tell you so, it's time to turbo it, right? Time to turbocharge it. And that's the difference, right? You benefit from, over time. Income's fantastic, no question about it. Who doesn't need income? But when it's time, and when everything, which basically is what I've learned over many decades, volatility arbitrage, market maker, you name it, running a whole bunch of ETFs, billion managed, these are the things that have become important to me in what I do, and why there is information on the website, my last year of performance of income trades and turbo trades. And yes, you're not going to believe it, but the performance is on there. And that's not even the Leaps Trader. Leaps is kind of a little bit mind-boggling as well. So very excited to bring you guys this stuff. No guarantees of anything. This is not a promise of anything, but boy, if you want to learn from an actual pro versus all the slop that's out there, let's face it, there is slop left, right, and center. You are watching the right video right now. So everyone have a wonderful day, and we'll see you next time.